What's up, guys? Welcome back to my channel. Before I go over the overall markets, I just want to briefly touch upon Oracle. So Oracle stock is in a bottoming process. You can see that the MACD on the daily time frame is firming up very nicely. The RSI is slightly making higher highs, ever so slightly, and we had a pretty interesting 2 days, if you will, on Oracle. So Oracle on Friday tanked about 4%. Down to lows about 114.75, and then it bounced 4% today, hitting 119.90 to close the day off. So you can see that Oracle didn't really move but much in the last 2 days, and we're still bouncing around this 118 and 120 support level. You can see that I've been looking for that capitulation style move. I don't know if that 114 is the final low in Oracle, but you can see that MACD is firming up nicely, RSI is firming up nicely. So, clearly investors are buying up Oracle despite what people are saying on social media, saying Oracle is going to crash to like 90 to 80 to 0, even. I think that for Oracle, there is a very good chance that some sort of surprise news is going to come out that lets the stock, bounce very, very nicely, give it a nice like 10%, 20% move in Oracle. And I believe it coincides with the overall market. So if you will, let's shift our focus a little bit to the S&P 500 and the triple Q. So the S&P 500 is pretty much flat today. We got a gap up today off of news saying that, Iran and the US were moving towards a peace deal for like the 53rd time and the 100th time. They were just recycling the same news over and over again. But the S&P 500, we got a gap up to start the day, and then we sold off promptly. And it was really funny because a lot of people over the weekend, they were talking about how it was really bullish for the markets. The S&P 500 was going to 750 to all-time highs. This is the gap and go type move. And they were proven wrong once again. The QQQ, which is the NASDAQ ETF, continues to sell off and undercut yesterday's low, while the S&P 500 did not. So the NASDAQ is actually in an interesting spot right now, because if you look at the daily time frame, we're tagging the 100 moving average, something we haven't really done since the March and April lows here. And we're still forming this bullish falling wedge on this on the NASDAQ ETF. So this should lead to a really nice pop, in my opinion. And keep in mind, we have FOMC this week, which is the Fed meeting, the Fed rate decision meeting, and a lot of people are saying that the Fed is going to hike rates. And I believe Poly Market gives it a 30% probability that the Fed will hike rates. And I think people are reading a little bit too much into what the Fed is going to do. I believe that there's a lot of nervousness surrounding the event. There's a lot of nervousness surrounding the Mag 7 earnings, given what happened last week. Google and Tesla reported earnings, and a lot of people thought it was going to save the market, and it ended up tanking the entire market. And the semiconductors, the SMH, the SOX continues to sell off hard, and a lot of high flyers like Intel, which a lot of people liked, MU, which is Micron, a lot of people liked, and SNDK, which is down 1,000 points off all-time highs. These names continue to drive sentiment in the market, and I think that's affecting the NASDAQ, the S&P 500, and people's perception in the market. So this is very interesting because we have a lot of catalysts this week. We have FOMC, which I mentioned, the Fed interest rate decisions, and we have Mag 7 earnings. We have Microsoft, we have Apple, we have Amazon, we have Meta, we have the bulk of the tech earnings coming up this week, and we haven't even gone through it yet, but a lot of people are just very, very nervous. And I believe that this is actually setting up for a possible pop, if you will, post release of the FOMC and the tech earnings, that could surprise a lot of people. And so I know the charts, they don't look too good on the S&P 500. You're below the 50 moving average. The 9 EMA continues to reject on the daily time frame. We didn't undercut, the lows of 2 days ago, and the next low sits at 716. But I believe that the triple Qs are actually going to be the one that drives the entire market. You can see that we retraced very, very nicely. We've gone sideways for a very long time, and then we started to accelerate the selling to the downside just recently. And it kind of reminds me of the April and March lows, where we traded sideways for a very long time, and then we started to accelerate selling, and then we finally got that capitulation low, and then we started to rebound very nicely. I don't know if this is going to be the capitulation low, but you can see that the overall correction looks very corrective in nature, not impulsive. I don't know if we're going to get this, oversold reading on the RSI or not, but I am looking for some sort of capitulation low, and I just don't know if we have it yet. I think we're very, very close. Maybe the FOMC minutes will give us the capitulation low, maybe one of the Mag 7 earnings. But you can see that the acceleration to the downside is speeding up. And, maybe we get one more, oversold reading on the RSI. But you can see that the triple Qs have already tagged the 100 moving average, which was something we haven't done since April, like I mentioned. We could potentially, move to that 200, but, I wouldn't really bank on it too much. That's another, I would say, like 3-4% to the downside. That would really set things off. But you can see that the S&P 500, the Nasdaq is, I would say it's very, very close. I mean, I've been looking for a 4-hour bullish divergence, if you will, like to like 370 or 730 to 732, maybe 720, and then we can get a higher low reading on the on the MACD, and then on the RSI. We don't quite have it yet, and this is, post market on Monday. So, maybe we get that on Tuesday, maybe we get that before the FOMC, and then we get it that final like undercut, on the 100 moving average, that undercut, and then the recover to kind of set things off. But yeah, I think sentiment is very, very bearish going into, that's what I feel, going into the catalysts this week and the events that are happening this week. So that kind of affects the stock for Oracle because, I believe that even though we got a nice 4% pop today, we still can break above the 9 exponential moving average, even though the MA, and you can see that clearly there's buyers coming in, right? But to look for that next 10 to 20% pop in Oracle, I believe we need the market to kind of behave, if you will. So hope this helps you guys with your analysis, and hope you guys enjoyed this video. I will be making updates to Oracle stock and the markets as well as we go through these events, and I will see you guys in the next video. Peace.